China crypto banned to benefit DeFi space. Gamevil becomes the second largest shareholder in Korea's Coin1. Illicit mining operation discovered at Tehran Stock Exchange. These stories and more here on Crypto. Hi, I'm Jaden from Crypto Gems, and here's what's happened this week in crypto. First up, China's crypto ban has made it a hard week for a lot of people. But as they say, every cloud has a silver lining. With centralized exchanges suspending their services to Chinese users, investors have been left considering alternate options, and many experts stated that it means they're expecting to see a shift in capital flows towards decentralized exchanges. Not only that, but regulatory headwinds could also prove beneficial for decentralized exchanges, or DEX. The future of DeFi sector. China's crypto ban was issued not just by the central bank, but by the United Front from all legal, public security, and banking authorities. And in a webinar by Consensus, one expert says the ban could act as a catalyst event, triggering additional adoption. Charles D. Hossie stated, open quote, DeFi is already a very large ecosystem where we see a lot of innovation. But when you see one market kind of strengthening the rules for such a massive population, I think we've seen into the pricing of some of the DeFi assets. Very clear opinions from the market that there is a migration, end quote. But the question is, are those exchanges ready to handle the pressure? Vincent Yang answered, open quote, for the past year we have seen that can be a gap between the trading volume and the skills of users and capital flows in CXs compared to DEXs. And if that is the majority of users or capital flows to DEXs, what will happen? I'm curious to find out if they can handle these inflow, end quote. Yang says DYDX performed particularly well following the ban as it is a leading decentralized protocol, and it only released its platform token recently. Tony Toro of Polygon Hermes told us that in a similar way to how China's mining clampdown provided a much-needed decentralization of mining power, this ban could minimize the centralization risks of Bitcoin and other major cryptos. Meanwhile, industry movers and shakers doing some deal-making in Korea. Gamevil, a South Korean mobile game developer, becomes the second largest shareholder of Coin1, one of the major 4 exchanges in the country. The reason behind the big acquisition will Gamevil plans to advance blockchain gaming and NFTs in Korea. Computer and mobile games are so big in Korea that some professional gamers are as popular as their favorite K-pop stars. Its booming gaming industry is the world's 5th largest, and competition is high among developers. To make the next StarCraft or League of Legends, Gamevil seems to think blockchain gaming could be the next level. In 2019, total sales of the gaming industry of South Korea were $13 billion, growing 9% from 2018. There are over 900 game developer companies and 11,000 PC cafes. This is where you can play computer games for around $1 per hour. Gamevil is a part of that movement, and its mobile phone games are hugely popular in and out of Korea. Now its subsidiary, Gamevil Plus, has become the second largest shareholder of crypto exchange Coin1, owning about 38% of Coin1's total shares. It is reported that with this investment, Gamevil will actively discuss with Coin1 on developing blockchain-based games and an NFT exchange. Gamevil already has a task force dedicated to developing NFTs based on its content and says utilizing blockchain technology is in line with the fast-changing trends of the gaming market. Play-to-earn NFT games on the rise in Europe and Southeast Asia, with Axie Infinity a prominent example. However, gaming regulations in Korea block blockchain-based games from being released right now, as its rating committee says play-to-earn NFTs encourage speculative behavior, so developers are currently servicing their blockchain games abroad to widespread popularity. Ban or not, Korean developers still lead the way. Well, there's no need to be scared on this occasion. It wasn't a boogeyman, but an illicit crypto mining setup. According to Iranian state media, a surprise inspection led to authorities discovering a number of mining rigs in the basement of the Tehran Stock Exchange building. Now, the stock exchange initially denied the existence of a mining operation, claiming the equipment was actually being used for a research project. However, when the news was confirmed, the executive deputy director of the exchange said the company should be held accountable, and its CEO subsequently resigned. Iran began regulating crypto mining in 2018, as you'll remember, but in an address back in May, the president said 85% of all mining in the country was run by unlicensed miners, draining 2 gigawatts of power from the grid every day. Following unplanned blackouts, temporary ban on crypto mining was imposed. However, that was due to wrap up by September 22nd. So the next time you hear that whir coming from your neighbor's basement, you never know.
If you've enjoyed the video, please don't forget to subscribe and click that notification bell so you won't miss any reviews or news update about crypto anywhere.